Yes, Fibonacci is a strong tool that we can use to identify where the retracement is coming to an end or where the buyers and sellers are executing their trades. Some people depend only on Fibonacci to find the nearest support or resistance level. But in this video, I'll show you a strategy that we can use with Fibonacci retracement tool to find the strongest support or resistance level. This means that when the price comes to this resistance or support level, there will be a potential reversal. So in this video, I'll show you how to use Fibonacci, how to use it with a strategy to find the strongest place that will hold the price. If you are seeing me for the first time, I'm James Merije. I'm a gold trader. I teach people how to trade crypto and Forex. And also, I give updates on crypto. So if this sounds interesting and you want to receive more videos like this, don't forget to like this video, click the subscribe button and turn the notification bell on so you can easily get notified whenever I drop a new video like this. Without further ado, let's jump in. So there are many things you have to consider, but the most important thing is trend. You can use Fibonacci level on uptrend or downtrend, but don't use Fibonacci on ranging markets. If it is a uptrend, this is how to draw your Fibonacci tool on uptrend. First of all, look for the lower low and draw it to the higher high like this. But if it is a downtrend, this is how to draw it. First of all, look for a higher high here and draw it to the nearest lower low like this. But for you to find the correct trend in the market, make sure you use 1 day time frame or any higher time frame to find the trend. This will help you to know the strong uptrend that you should follow. Like if you want to trade gold, first of all, identify the trend using the 1 day time frame or the 1 week time frame. From this, you can see that the gold have been trading up. So for you to draw a Fibonacci tool on gold, first of all, start from the lower low and draw it to the higher high. So the next question is, now I know how to use Fibonacci tool. The next thing is, how can I use this to find the best place to enter a trade? So for us to do this, we are going to consider 3 things. 1 is the psychological level. 2 is a place where there is a fight between the bull and the bear. And the 3 is the strongest resistance or support level. Now, as you can see, gold have been trending up. So all we have to do now is to find a potential pullback. Because here you can see there is a pull-up. That means gold might come back to retest the nearest key level or the nearest support level. So we are going to use our Fibonacci level with other 2 things to find out where this retracement will come to an end or where buyers will execute their trades. So the first thing is to consider a psychological level. So if you go to our trade, you will start the nearest psychological level supposed to be 2550. So let's check our chart to see. We are going to use gold, for example. And remember, this strategy can still work on any financial market, be it crypto, Forex, commodities, stocks, or otherwise. So this is gold on 4 hours time frame. As you can see, gold pulled up from here, above here. Now it is having a retrace back. And the question you should ask yourself is, when or where should this retrace back come to an end? You can't tell if it will come to an end here or here. So first of all, we are going to consider the nearest psychological level. So to do this, as you can see, 2550 is supposed to be the nearest psychological level, which is here. If you go to the lowest time frame, like 1 hour time frame, you can see this was the exact place we predicted. 2550 supposed to be here. So we mark it slightly at 2550. Now we have confirmed that 2550 is the nearest psychological level. Keep in mind that psychological level is numbers that have 0 or big numbers. 2550 is a big number, so that is why we consider it as a psychological level. Now the next thing is to find a place where bull and bear had a fight. So we are going to open our chart to check this. Now the second thing to consider is a place where the bull and bear had a fight. So the place they had a fight is here. As you can see, there was a fight from here and the fight keep pulling up to here before it starts trying to retrace. So now we are going to mark this place it had a fight again. As you can see, the bull and bear had a fight at the particular place we considered as a psychological level. That means here is a strong level. But for us to confirm this, we are going to bring our Fibonacci tool. And remember, the strongest level is the 50% and the 60%. So we are going to confirm if this 50% and 60% rhymed with the place we considered our psychological level. So let's try it. Now on 4 hours time frame, we are going to use Fibonacci tool. So I'll drop my Fibonacci here and pull it up. As you can see from this, the 50%, which was the strong Fibonacci retracement place, was the exact place we put our psychological level and our key level. So that's the 550 level. So this gives us a high confidence that gold will retrace to this level before going up. But that doesn't mean it can't break it. If it breaks it, then we look for the nearest support level again, which is this one. But this gives us a high probability that gold will find it difficult to break this place. So a few days later, if you come back to this gold, you can see the gold retrace back to that particular level and started pulling up again. Look at it very well. This is the exact place we mark as psychological level, and that's the exact place we mark as a Fibonacci retracement level and also our key level. So we combined 3 things to make a good trade. This is not a guarantee that you will win all the trades. Nothing is guaranteed in trading. The most important is your winning rate should be higher than your losing rate. So once gold comes back to the level you are waiting for, then look for confirmation to enter the trade. If we go to 1 hour time frame, this is 1 hour time frame. Look closely, you see bullish engulfing bar. After this bullish engulfing bar appeared, if you enter the trade, you could have made insane profits. Combining these 3 things can allow you to follow the trend and make huge profits when trading any financial market. For more trading guides, please join our community using the link in the description of this video. Thank you. Keep in mind that this is not a guarantee. Nothing is guaranteed in trading. So employ risk management. But if you use this strategy, it will work 90% of the time because you are considering 3 strategies to use it as one. So using this strategy can help you become a profitable trader. It can increase your winning rate. And don't forget to like this video, share the video with your friends, and join our community using the link in the description of this video. Thank you for now. Goodbye. Good luck.